Hey guys, it is Patrick with Financial Grit Media. If this is your first time watching one of our videos, make sure you press the subscribe button and turn on your notifications. That way you're notified every single time we upload a video to Financial Grit. Now, this video is all about index fund. We're going to give you an overview of index funds and what those funds are, especially if you've been watching some of our other challenge videos that we post twice a month to Financial Grit Media, and you're wondering, what are these index funds that we're talking about, as well as you might have heard other investors talk about investing in index funds as well, and what are they talking about, and why is everybody promoting index funds? So this video, we're going to help you try to understand what is index funds. Now, what is an index fund? Well, let's start by kind of breaking down the definition of what a fund is. So whether it's a mutual fund or an index fund, we're talking about what a fund is. A fund is basically a basket or a company that goes out and tries to pool different investors' money into this basket. Okay. Then the fund or the company goes out and uses that money and its buying power to go buy stocks in the market. And so you as an investor, when you put your money into the fund or you invest in a fund, you basically own the fund. The fund then uses their money to buy stocks. So basically what you're doing is you are indirectly owning the stock because you own the fund. And so what a mutual fund and index fund tries to do is they go out and they try to buy stocks that fit the fund's profile. So the fund's going to have a profile. For instance, let's say it's a real estate investment trust fund. And so it goes out and tries to find companies or things that are related to real estate investment trust. So when you own that fund, that investment goal is real estate investment trust, you're going to be owning different companies that are what we would consider in real estate investment trust companies, okay? And so that's what a fund does, is they have an investment profile, and that profile is used to direct how they're going to invest. Now, we haven't really talked about the difference between mutual funds and index funds, and really a mutual fund would be actively managed fund and an index fund. But basically the difference between an actively managed fund and an index fund is that an actively managed fund has a fund manager that actively tries to pick stocks. They pick stocks based on their expertise and their research and the team that they've built to start to try to make sure that fund makes more than the underlying base benchmark for that fund. The difference between the actively managed and an index fund is the index fund does not necessarily have an actively managed or active manager that's assigned to the index fund. The index fund tries to benchmark it to a certain index or indexes, and based on that, they buy their stocks based on what that index. So we've been talking about the S&P 500, for instance, and so the S&P 500 is made up of the 500 largest stocks. And so what the index fund tries to do is emulate that 500 S&P 500 with the 500 stocks. So it will own 500 stocks with that. Now, because the managers of the index fund aren't trying to actively manage it, they don't necessarily trade stocks very often as much as the actively managed fund manager is doing, which they are selling and buying every single day to try to make their returns on the fund